ULTA stock just got destroyed, dropping by about 30% in a single day after they reported second quarter earnings. And so naturally, I received a lot of comments and messages asking me to give my opinion on the stock. So in today's video, we're going to take a look at the company, their business, we're going to look at the stock, the valuation, and we're also going to take a look at the reasons why it dropped. And then we'll also take a look at what their future looks like, and I'll let you know if I plan on buying ULTA stock anytime soon. So it should be a fun video. I hope you guys enjoy this. Let's go ahead and get started. What's up everyone, my name is Ale. Welcome back to my world of stocks. Let's go ahead and start by taking a look at the company and their business, and then we'll transition to the stock and the reasons why it dropped. Okay, so you've probably heard of ULTA before, and that's because they have over 1,200 retail brick and mortar stores throughout the country, and of course I'm talking about the United States, where they sell a number of beauty products and even offer full service salons as well. The business model works amazingly well because it offers a more personal touch that you wouldn't get from big box stores like Walmart or Target, and certainly not from online competition like Amazon. In fact, customers usually go into the store to get a haircut or to get their nails done and maybe ask for some advice from beauty professionals, and then they end up leaving with a bag filled with product, and it can certainly be product recommended by the actual professionals themselves. So it's kind of an easy way of selling more and more products to your customers. And it's a pretty sticky business as well because they have over 32 million reward members already, which is about double what Starbucks has, yet Starbucks has like 12 times as many stores, so that's very impressive. And with really strong advertising campaigns that include celebrities like Kylie Jenner and Ariana Grande, they are able to keep customers interested in coming back to the stores to try new brands and make more purchases. So at a time when retail stores are closing left and right, ULTA has not only expanded their footprint, but their sales and profits have also been soaring, with revenue reaching close to $7 billion in their last fiscal year. These are growth rates of 26%, 20%, and 14% over the last 3 years. Sure, that growth is slowing down, but it's still impressive to consistently bring in double-digit growth in an environment that has been getting more and more difficult for brick and mortar stores, although ULTA does technically have an e-commerce platform as well that we'll talk a little bit about later in the video. In any case, their profits have been equally impressive, bringing in hundreds of millions of dollars in net income every year, with growth of 28%, 35%, and 19% over the past 3 years respectively. This strong performance has led to the stock taking off, having climbed from just around $100 per share in 2014 to almost $370 in 2019, for an increase of well over 250%. Unfortunately for shareholders, the stock suffered an enormous crash on Friday, dropping by about 30% in a single day alone. The crazy thing is that because the stock had been so hot lately, the stock has still not reached the bottom of their 52-week range. In any case, this now puts their valuation at just 16 times forward earnings, with a PEG ratio of only 1.5. Now, you could definitely argue that there are some higher end retailers out there like Macy's or Nordstrom that have cheaper valuations and even pay out some high dividends as well. In fact, Macy's and Nordstrom trade for only 5 and 8 times forward earnings respectively, while also yielding dividends of 10 and 5% each as well. Although I'd have to assume that Macy's can be cut at any moment with such a high yield already. But the thing is that both of those companies are seeing revenue declines, while ULTA is still growing at a pretty high rate. And this is in a very difficult retail environment, so I think it's very impressive growth because of that. The lack of a dividend might be a deal breaker for many retail investors, but I think both points of view of investment could certainly be argued depending on whether you're more of a growth investor or a value dividend investor, because the money that they're saving from not paying a dividend can certainly be used to help fuel that growth even more so in the future. But either way, ULTA has ultimately been performing very well as a company, so why then did the stock take such a brutal beating in a single day? Well, in my opinion, this is absolutely a growth stock, and it was kind of priced to perfection, and so the stock price reflected all of the impressive growth that they've been experiencing so far. And don't get me wrong, I am someone who absolutely loves growth stocks, but the one thing that I don't like about them is that they can usually get hammered the worst during times of uncertainty or if their kind of future guidance ever takes a hit, because they're usually priced to perfection because of that very high growth. And it looks like that's what happened with ULTA in this earnings report. So let's take a closer look at what exactly happened. Well, according to Yahoo Finance, they were expected to continue growing their sales by over 12% this year and over 10% next year, while also growing their EPS by about 19% this year, 15% next year, and a 17% average over the next 5 years, which would still be solid growth for the future. And their second quarter earnings were actually not that bad, as they reported EPS and revenue growth of over 12% each, with net income also climbing by 9% year over year. However, the issue was that they missed analyst expectations, and then to make things worse, they lowered their guidance for the full year. They missed EPS by around 4 cents. They reported $1.67 billion in sales versus 1.68 expected, and they also missed same-store sales with an increase of 6.2% versus 6.6% expected. They also lowered their EPS guidance by over 7% and their revenue guidance to growth of 9 to 12%, which is down from their previous guidance of a low double-digit percentage. So basically like around 10.5 kind of at the midpoint, but they were expecting a little bit more than that. As far as the reasons go for the lowered guidance, their CEO noted that there are headwinds that they are currently seeing in the US cosmetics market. This is in stark contrast to the raise in guidance from Estee Lauder, who is not really a comparable, it's not exactly a one-to-one comparable company to ULTA, but they do operate in the cosmetics and beauty kind of markets, and they continue to see very strong growth, but a lot of that growth is actually coming primarily from China. In fact, if you take a look at their earnings, their Asia sales grew by 21% last quarter, but their Americas revenue actually dropped by 5%. And as far as I know, ULTA only operates in the United States, so they don't really benefit from any growth that is out there in China. On the other hand, when looking at the global cosmetic market, North America makes up a very large percentage of it at 25%. Asia is definitely bigger at about 40%, but it's still a decent market size for ULTA. And the overall market is still growing at a decent rate of over 5% according to Statista, and while the market did take a noticeable dip during the last recession, it at least kept growing and seemed to recover pretty quickly as well. Statista also notes that the US is the largest cosmetic market in the world by country, doing over $62 billion in 2016 alone. And ULTA isn't planning on staying put here either. They see the opportunities abroad, and in their previous earnings, they announced plans to expand into Canada as the first move in becoming a global company, which is something that the CEO has noted many times, that they do want to be a global company. I can't say whether an expansion to Asia would work, but any international expansions at all should be huge growth drivers for ULTA in the future. And even with the rise of online shopping, ULTA has increased their investments in their online infrastructure to help fight off the online competition, and that seems to already be paying off, as even with the weaker guidance, they're still expecting to see online sales climb by 20 to 30% this year. For context, they did $752 million in online sales last year, so that's going to be very close to around $1 billion in online sales this year. Again, they did less than $7 billion in total revenue last year, so this is a high growth area that still has a lot of room to keep growing. And they certainly have the funds to keep innovating like this, considering that their balance sheet is actually pretty strong at a time when most retailers are loaded with enormous debt. But in ULTA's case, they have almost $2 billion in current assets, with only $1 billion in current liabilities and $0 in their long-term debt. So that's a pretty good balance sheet overall. So for me personally, it feels like the more that I research this company, the more that I fall in love with them, because I really like their business model for being a retail, more of like a traditional kind of retail company. I think that they have found some very impressive ways of fighting off the competition, and especially fighting off kind of the retail apocalypse from the growth of online shopping. But for me personally, there's really two primary reasons why I still don't really think that this stock is a good fit for my personal portfolio. And reason number one has to do with the fact that I don't really have a lot of interest in the kind of cosmetics and beauty markets. And you guys know the type of investor I am. If I don't have a lot of interest in the market, or if I don't understand it, or I don't participate in it myself, then I usually don't invest my money in that company, because it's going to be more difficult for me to understand their business model, understand their products, and understand their competition, while at the same time, I'm going to have an increased risk of making a mistake with my investment. And then reason number two is that at the end of the day, they still have a lot of exposure to kind of the brick and mortar kind of retail environment. And that shouldn't really count against them, because one thing that really frustrates me with kind of brick and mortar retail stores and companies is that they never adjust. They don't adjust, and they don't fight off the online competition, and they don't figure out ways to get customers to go through those doors. And I think ULTA has done an amazing job of adjusting and pivoting so that they can survive this more harsh kind of retail environment. However, I usually like to invest more so in companies that are the disruptor, not so much the survivor, where I don't really feel like ULTA is really disrupting anything. I just think that they're adjusting and they're surviving, and I don't want to take credit away from that. That's a big deal, and it's a huge accomplishment, and I really like them for that. But at the end of the day, they're not really a company that I'm very excited about, because I still don't see them as a disruptor. I see them more as a company that is adjusting and is going to, can absolutely survive this harsh retail environment and even grow in it, but it's going to be capped a little bit, at least in my opinion. So anyway, that's just my personal opinion. It doesn't mean that it's not a good stock or a good investment. I actually really like them, and I'm going to continue to watch them. And if I start to feel more comfortable with the market, and maybe if the stock continues to struggle and it continues to go down, I may actually end up investing in this company. But for right now, it just doesn't really fit my personal strategy. So anyway, that's how I feel about ULTA. Let me know what you guys think. Are any of you invested in this company, or are you thinking about investing in the company? I would love to hear your thoughts down below. Thank you so much for watching the video. If you enjoyed it, please consider hitting the like button. It really helps the channel, and I'll catch you guys in the next one. Take care. Bye-bye.